What's up traders, welcome to Failure to Displace. In this video we're going to take a look at the New York AM session on EURUSD and see how we came up with these two potential trades. One loss, unfortunately. I will explain how we could potentially have noted that this was going to be a loss, or at least a very risky trade, and then one win, potentially netting you 5.5R. So let's jump into the analysis now and see how we came up with these trades. Before we jump into the analysis on EURUSD, I just want to show you why I'm not interested in trading US 500 or the S&P 500 this afternoon. It's basically done nothing. I really did want to do an analysis and trade execution on US 500 because I've been neglecting it recently. But we can see New York has opened up. It's not really offered us any volume. It's just contained within the London range. So we've had no real sweep of liquidity until the very end of the session, which I'm not going to be trading. At this point, there's no entry for me after the 12 noon candle. So US 500 is out. Let's go back to EURUSD and see what we were offered here. I just want to point out one thing here. I did get a comment from a trader earlier on saying that they were looking for the optimal trade entry on the London range. I mentioned to that trader in the comments just to be wary of what the US session may do. We're in a very bearish market here. I believe what the trader was looking at was the fact that we had pumped up, coming back to optimal trade entry where we did have a breaker block here. We had a fair value gap as well. However, this retracement happened so close to the New York session in the middle of the London range with very bearish market structure. When New York opens, it's going to drive for liquidity. At this point, I would be very wary of taking a trade. If I was in a London trade, I would have been going to break even or closing out as New York was opening. And I wouldn't be opening as New York was about to open. I wouldn't be taking trades here. I would want to see how New York played out. We can see that New York drives aggressively for the London lows. So it's basically continuing the trend that's already been in place for the past few days. Takes out London low. So this is why I would be hesitant looking at taking an optimal trade entry when we're coming into the last hour or so of the London session, because I am expecting New York to drive for liquidity, and it could be quite easy to be on the wrong side of that, especially given the fact that we're in very bearish price action anyway. So as New York opens, we begin driving lower. We can see that we do have untapped levels of liquidity below us from earlier on in the month. This is the monthly low, I believe, from the 3rd of August. So the lower one is from the 3rd of August, and that is the monthly low. So again, a big draw on liquidity. If we were to take that out, I would be looking for a potential reversal at that point. Drop onto the 5. So we'll continue on in the New York session. Price is driving aggressively lower. It's quite clear it's going for these levels of liquidity. We've tapped it on the 830 candle. And then again, we've swept the low at 840. Now the low has been taken, I'm reverting to the 2022 model initially to see if we can get a really clean entry on the 2022 model. So for that, I'll be looking at the 1 minute time frame. So I'm looking for a break of structure with displacement and then a retracement into a fair value gap for a long trade. The break of structure for reference at this point would be this swing high here that I would be interested in. So I'd need this to be taken out before I would take a long position. Price continues lower, so we have put a high in here. So this is now our new break of structure. So we've broken structure here, we've left displacement. So I'm going to point out a couple of things that I'm noticing on this which would make me concerned about taking this trade. First of all, relative equal lows here. This isn't an aggressive move down, we've just created liquidity at this point. Timing wise, we're at 8:50. So we're nearly into the new hour. So I would be more interested in waiting for the new 9 o'clock candle to open before I take an entry. Concerned about these relative equal lows. This I wouldn't class as displacement. You can see the size of this candle, this aggressive bearish candle that's moved down. well, we're going to want to see displacement going back up again, especially given the fact that we're already very bearish. We're going to want to see some bullish displacement to confirm an entry. This to me doesn't look like bullish displacement. So there's three factors at this point that would have me concerned about trying to take a long position at this. Yes, we've broken structure with a wick. We've not had a candle body close. Candle body closes aren't necessary on the 2022 model. They are preferable, but we've just wicked through it. The next candle does give us a body close through, but we've got relative equal lows here, and these candles are significantly smaller than this bearish candle and these bearish candles as well, which is giving us displacement coming down. So really I need to see a change in price delivery before I'll be looking at this, and again I'll be more interested in taking an entry at 9 AM, the new hourly candle open, rather than getting stuck into a move in between the 15-minute candles. So let's have a look how this reacts. I will say that this is legit. If somebody wanted to take this, I could understand why. So you could be potentially taking a trade from this fair value gap. However, it would be a very aggressive entry. Coming up to the 9 AM candle now. So this is 9. Had a little bit of respect on that fair value gap. Ultimately, price is driven lower, taking out this liquidity. So that would be why I will be cautious at this point in price action. I would like to see a more aggressive move upwards and less aggressive move going down, less aggressive bearish movement. So let's continue on. I'm still interested in a long position at this point. So we're into 9:30 now, so this is New York Stock Exchange is now open. So again, this could be an extra push of volume coming into the market. You can see the candles are getting smaller, so we're getting less displacement on this little leg here. Aggressive move down. And then an aggressive buyback. So this is a cleaner bit of price action than this, I hope you can see. We've got one single push down, quite an aggressive push down, and then an aggressive buyback, as opposed to this relative equal lows and a small buyback there. The break of structure for this long would be here. So we respected that fair value gap. We have got a break of structure there. So again, it is only a wick. It's not a candle body close. So ideally I would have liked to seen a candle body close, but we've wicked through it. We've left displacement here. One thing that really stands out to me is this fair value gap, which is also a balanced price range. So we've got a bearish fair value gap here, followed by a bullish fair value gap. Where the two overlap is our balanced price range. Very, very strong area for a reaction if we come back there. So we've had a very minor break of structure. We've left the balanced price range. Time-wise, it's very similar to where we were before. We're at 9:53. So I'll be more interested in looking for the new hourly volume to confirm a direction for me. So price has come back. It's tapped the balanced price range. See what kind of reaction we'll get from this. So it has reacted from it, closed back above it. So that's a good sign. 9:57. Closed through this bearish fair value gap that was left there. So again, another good sign. We've left a bullish fair value gap at this point. So we've respected one bullish fair value gap. We have had a break of structure. We've created another bullish fair value gap at this point here. We are now at 9:59. So this is the open of the new hour. So this is where I'm very interested to see what direction the new hour may take us. That's the 10 AM candle. 10:01, we tap the fair value gap, respect it, and get a nice rejection. So we've got here a nice swing high. This candle is lower, this candle is higher, this candle is lower. So we've got a swing high here. What I would be tempted to do in this kind of situation is stick an entry at the break of this swing high, stop loss below this candle's low, because this is the candle that created this fair value gap that's been respected. So I want to have cover for the lower fair value gap just in case we do pull back and wick into it. So candle below this low, a break of this high to confirm that we do have movement going up. We're into a new hour, so I'm expecting new volume, and this rejection is telling me that the volume hopefully is very, very bullish. For a target, got relative equal highs here on the 1 minute. So this is a really clean price action, lots of liquidity, loads of longs to get snapped out here. So I would take my take profit at this point for the first take profit for a 2.5R. So we do wick through. Get some volume coming in. You can see 10.11. Now the price starts pulling away, which is really nice to see, leaving bullish fair value gaps. So this is giving us confidence now that we've gone from leaving bearish fair value gaps to leaving bullish fair value gaps, and we are closing through bearish fair value gaps that were down on this bearish leg here. So we can see we have got a change in price delivery at this point. Taking these equal highs for a nice 2.5R. The next option would be coming to take out the New York session high. So this could be a Judas swing, and we come back and take out the high for 6.7R. Price kind of chopped around a little bit, is continuing high. We've had no real pullback. Then up to current price, so we've not quite taken the high yet. We have got currently up to 5.5R as you've come into the lunch hour at this point. So really, really solid trade. You may have had one false start there. I could understand that is a valid entry. There's a couple of warning signs that would make me be cautious about taking this. This one, I hope you can see, this drive down and then buyback is much stronger than this area here. So this is the kind of price signature we want to be looking for a 2022 model. I will admit that there is no body close above. We only took it with a very, very tiny wick, that liquidity there. However, having the confirmation at the start of the new hour respecting these bullish fair value gaps was enough to signify to me that we were potentially going to have a bullish retracement. So that's the analysis from the New York AM session on EURUSD this afternoon. I hope that was useful for you. If you did enjoy the analysis, please leave it a thumbs up. I know it's a little bit different to the previous analyses that I've done, but that's how I saw the market today. If you've got any questions, leave them down in the comments section below, and consider subscribing. I'm dropping videos like this more or less every day, and it'd be great to have you guys on board. Thanks for watching. I'll see you in the next video.